The dollar is the most remarkable achievement in the history of money. Think of it. This piece of paper cost nothing to produce. There's nothing behind it except the goodwill of Ben S. Bernanke. And let us not forget the U.S. Congress. This piece of paper somehow still commands value and respect. How can the dollar be anything except the world's greatest monetary brand, the Coca-Cola of money? How can it be anything else but? Well, you just watch.
Since 1971, the U.S. dollar and the global financial system have been based solely upon faith. Faith in the guardian of that currency and of that system, the American Central Bank, the Federal Reserve. As the world's reserve currency, the U.S. dollar is how we measure our time, our products, our self-worth. Ours is a system based on trust and confidence, both of which began to disappear in the fall of 2007.
Welcome, everyone. Thanks for joining. This is going to be part 2 of my classroom series from my Satoshi Starters, learning about understanding how Bitcoin will help you stop your financial ruin and help you escape this matrix death spiral of the whole world fiat system. If you find this on YouTube or Rumble, thanks. Please like, subscribe. We'd love to have you. Links below about how to join the Skool community as well, which it is free as of now, but that will be changing, so take advantage while you can. But yeah, there's a lot of great info. There's going to be a huge series where I'm curating the best information to really help you understand why we need to escape this fiat system and how Bitcoin is a solution to save us all and save, the money we work so hard for that we need for our future, and basically store our value and store our future value. So without further ado, let's continue.
Congress could not act in a timely way. Therefore, the Fed felt like it was important to stabilize the economy that we do it. That is not the normal role for a central bank, nor should it be.
While politicians debated, the Fed acted. It used its political independence and unlimited power to create money, to provide trillions of dollars in loans to corporations of all kinds, dwarfing the congressional aid that followed.
What people on Main Street and most politicians didn't understand is that if we didn't do something, General Electric would have pulled down, Berkshire Hathaway would have pulled down, General Motors would have pulled down, Citigroup would have pulled down, Bank of America.
I mean, we came to the brink of the abyss and we looked over, and it was a long way down. The Fed really did have to step in.
The Fed created the problem, allowing the banks to have fractional reserve banking, which will be a future video, because many people don't understand how fractional reserve banking works, and it's scary. And it's just, if you knew how it worked, everyone would take their money out of the banks, but just not your money. But that's another story, another day, another video. But really, since 2008 and since the Fed came in and turned those money printers on, they've never stopped. It has gotten so worse with the monetary debasement, M2 supply, all these things that we're going to go into more to help you understand what these things mean. That we have just never, everything ended in 2008. Okay, we have been basically zombie country and zombie since 2008, and we always have to have more stimulus, more money supply, and this is just helping drive that point home. So I hope you're doing the right thing and learning about this, which is great. You're here watching this, learning about this, and how to escape this and help yourself for the future.
When this is why the Fed was set up in 1913. To provide liquidity to the financial system as a whole at a time when you have a financial panic.
What do you know about the Federal Reserve?
Not much.
There is this perception that people have that the Fed is this kind of black box. Nobody quite understands it.
Take care of currency.
Where's something about money?
They somehow regulate the stock market.
I think we're mysterious to people. I think they're not sure what we do.
Sounds like they're printing money. Nuh-uh.
One myth that's out there is that what we're doing is printing money. We're not printing money.
Is that tax money that the Fed is spending?
It's not tax money. It's much more akin to printing money than it is to borrowing.
You've been printing money.
Well, effectively.
What exactly is the Fed's job? It does control the money supply, set interest rates, regulate banks, and is supposed to ensure the safety and soundness of the financial system. But what caused the crisis in the first place? What brought the wealthiest nation in history to its knees? According to many economists and senior Fed officials, it was the Fed itself at the eye of the storm.
And I think there is a natural inclination that things are fixed, but things are not fixed.
Everybody wants to go back and say, things are fine now. Look, we solved our problem. We're just asking for another crisis.
This is an experiment. We've never done this before. We've never been here before. The Federal Reserve is really operating by the seat of their pants.
So I think we need to look very carefully at what the Fed did, and perhaps even more important than looking back and blaming people is the issue of what role should the central banks play going forward as we start thinking about this is a mess and we don't want to do this again.
Yet, of course, they did do it again with the ridiculous amount of money that they printed during COVID. I mean, the trillions and trillions of dollars that they printed and threw into the system, which caused a huge inflation, which is why we can't get below 3%, and which is why you're seeing things like Bitcoin and gold both rise so much, because there's only so much real sound money. There's one which is the better option, which we'll learn about and talk about more in the community and future videos, which of course is Bitcoin, but that's the point here.
This isn't the first time the central bank we created to protect our economy has instead led us to the brink. The real currency of the world is trust. As that slips away, can the Fed learn from the past, and can it do it in time?
The Federal Reserve has the power to create money. If you or I run the printing press in our basement, we're counterfeiters. When the Federal Reserve runs the printing press, the electronic printing press, it's monetary policy.
Monetary policy is when the Fed uses its power to create or destroy money, to lower or raise interest rates. If it creates more money in the system, money becomes more available and interest rates fall, so we're more likely to borrow and spend. If the Fed takes money out of the system, we borrow and spend less and are more likely to save.
Directed the Secretary of the Treasury to suspend temporarily the convertibility of the dollar into gold or other reserve assets.
And that began the modern age of inflation.
For the first time in history, the dollar was just a piece of paper, backed only by faith in the Federal Reserve and its policies.
Now, what does this mean for you? Your dollar will be worth just as much tomorrow as it is today.
That promise was only as good as the Fed actions behind it. But bowing to pressure from Nixon and clinging to flawed economic theories, the Fed refused to raise rates. Over the next decade, the cost of living more than doubled, as the dollar lost more than half its value.
And by the time the 70s ended, it was a total mess.
Prices went up infamously during the Carter presidency.
People began to say, we don't want it. We won't stand for policies that create ongoing inflation.
I really hate it because you pay so much for so little.
Good evening. Prices in the United States during the first 3 months of 1979 went up at an annual rate of 13%.
The question is, how long will this go on? Inflation running out of control. The answer? Probably for years.
The Fed had softened the dot-com crash with aggressive interest rate cuts. And now those same cuts set off another boom.
Lower rates mean lower mortgage payments, which created an unsustainable bubble in housing.
In today's struggling economy, many Americans have taken refuge by investing in the real estate market.
So we ended up encouraging a housing boom. We, being the Federal Reserve, ended up encouraging a housing boom. I will continue to defend those decisions because we had no employment growth after the bottom of the recession.
The extraction of equity from homes has been a significant support to consumer spending.
I love that house, plus the schools.
The kids are 3 and 1.
They're gonna grow up. What?
This listing is special, John. You guys can do this.
We can do this.
Okay.
Are you kidding me?
By lowering the price of money, the Fed was raising the prices of things bought with borrowed money.
We favored real estate, for example, because we didn't want to see people out of jobs. Well-intentioned, but the consequences are we created the incentives to borrow. And we brought households to debt levels that no one would have imagined 20 years ago, not just 50 years ago.
You know, the way a healthy economy grows is people earn money and they go out and spend it. The way an unhealthy economy grows is people borrow money and they go out and spend it.
The Fed's low rates helped spur a doubling of mortgage debt, turning the American dream into a tragedy for millions of families. But the real borrowing spree didn't happen on Main Street. Seduced by the same low rates, the world's biggest banks jumped at the chance to multiply their profits with massive borrowing of their own, or as they say on Wall Street, with leverage.
And this is where the real egregiousness in interest rates manifests itself.
The Federal Reserve's main policy interest rate was only 1%. The big banks lend that money out on a mortgage at 5 or 6%. Now, if I can borrow money at 1% and lend it out at 6%, I'm going to make a tremendous profit from that. That was the problem with the low interest rates. Financial institutions borrowed too much, became careless in the lending they did.
Able to borrow money for nothing and earn huge fees for lending it out, Wall Street began simply giving money away.
You know, firms like Lehman Brothers borrowed at those low interest rates, made mortgage-backed securities on the base of it, and spread it around the world.
A growing family with a lot of debt, a young couple with no down payment, a business owner whose income was hard to document. Every one of them was turned down for a home loan by 3 different lenders. I'm with Countrywide, and I got them all approved.
Now, the Fed didn't do that. The banks did that, but the Fed could have and should have prevented these crazy mortgages from being granted.
The Fed could have cut off his...
And understand, the Fed creating this to banks with called mortgage-backed securities. If you watch the movie The Big Short or Margin Call, any of those kind of movies that explain it. But this is what basically spearheaded, got pushed through, invented Satoshi with the white paper and launching Bitcoin right after the 2008 collapse. This right here caused the invention and the launch of Bitcoin.
Speculation quite easily, but the atmosphere in Washington then was quite the opposite.
We have so many economists coming on our air and saying, oh, this is a bubble and it's going to burst. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis. So what I think is more likely...
What Bernanke should have said is, it has never declined because it's never had a bubble before. Robert Shiller's data shows 100 years of incredibly flat price series, followed by suddenly a Himalayan mountain going up very rapidly in 3 years. Bernanke is the perfect academic. He's not looking at house prices. He so profoundly believes in market efficiency that there can't possibly be a housing bubble, so why bother to look for it?
Stocks crushed today.
Financials hit really hard. Bank of America down 40%.
One of the worst days ever on
This
Wall
is a
Street.
market driven by fear.
Alan Greenspan told everyone to take a teaser rate, and Bernanke is being an academic. He has no idea how bad it is out there. He has no...
Over the course of the crisis, the Fed would pump trillions of dollars in emergency loans to banks, corporations, and governments around the world. Though the moves were a logical extension of the Fed's ideology, they were unprecedented.
Are you committing in this interview that you are not going to let any of these banks fail? That no matter what their balance sheet...
Hey, look, it's March 2009, and Bitcoin is in its infancy. which has only started trading for a few months, and I don't think even had value yet. I think people were mining it, and it still had zero value. So just look at where we are today. That as of right now, as recording, we're 112,000 with an all-time high recently of 124,000 from $0 because of what they did and what happened in the collapse of 2008, and why money, as you saw in the previous video, is basically worthless with the Ponzi scheme that exists.
Actually looks like they are not going to fail.
They're not going to fail.
Bernanke single-handedly stopped the run. But when his bailout failed to jumpstart recovery, the Fed upped the ante. With interest rates already at zero, the Fed's only way to juice the economy was to print more money, the technique called quantitative easing, or QE. Beginning in 2009, the Fed purchased over $1.3 trillion of mortgages and debt from failed lenders Fannie Mae and Freddie Mac. It was a temporary nationalization of the mortgage market. What followed was the single biggest stock rally since 1932. And when markets faltered in 2010, the Fed announced a second round, QE2. If the Greenspan put had been whispered, the Bernanke put was now loud and clear.
From 20% to zero, drops in interest rates bailed out investors in any number of transactions. Every time the response is more debt fueling growth.
$40 billion of mortgage bonds a month until further notice.
Bringing interest rates down, it affects stock prices, it affects home prices. If people feel better because their 401k looks better and their house is worth more, they're more willing to go out and spend.
But can a problem created by money for nothing really be solved by ever more of the same?
The major banks are racking up profits, and yet lending to small businesses actually declined in the third quarter.
Somebody's paying the price for low interest rates. It's you and me who have money market accounts which are earning 0.27%. I mean, I worked to save that money. And now, in one swoop, the Fed decides I get nothing for that money in order to bail out the banks.
Exactly. And money still today pays nothing in savings. And anybody puts money, it's a melting ice cube. If you have any kind of fiat money in the bank, in savings, it is a melting ice cube. Keep what you need to have to live, pay your bills, things of that nature. But otherwise, it's a melting ice cube. That is why if you look at Bitcoin, it's called CAGR, which is cumulative annual growth rate. Basically, it's been averaging in the recent term 40-50% annually and way higher. If you get a 20% annual CAGR going forward, you are going to do tremendously well. So that is the purpose and why this is such a great technology and why it is the future that you need to be a part of and make sure that you're getting a part of for you and your family.
Free of the gold standard's restraint, the only limit on our government's ability to borrow and print is the confidence people around the world place in our IOUs.
It's a first in our nation's history, cutting the country's top AAA rating to AA+.
But how long can a dollar-based system last if we take that confidence for granted?
The United States can pay any debt it has because we can always print money to do that. So there is zero probability of default.
How can the dollar be anything except the world's greatest monetary brand, the Coca-Cola of money? How can it be anything else but? Well, if you produce enough of these green pieces of paper, if you throw around your weight too far as the world's one and only superpower, bad things happen.
For years, the country lived beyond its means. As a member of the euro currency.
As a debt crisis that began in Greece now threatens all of Europe, it's clear that easy money has been no kinder to governments than it was to homeowners. And while the U.S. may not be Greece, the lesson is cautionary. No nation, however powerful, is too big to fail. More than ever in its 100-year history, The Federal Reserve holds the future of our economic system in its hands. Can the Fed help foster an economy that's built to last? One not based on stock or housing bubbles, but on sensible, productive investments that will enrich not just some of us, but all. Or will it continue to offer the empty promise of money for nothing?
And as we end this here, and I hope you got a lot of value out of these two, we already know the answer to that. They are never going to do for everyone. The only one that's going to do for everyone, the one that is completely decentralized and completely sovereign wealth for yourself and has every characteristic of the most pristine sound money, is Bitcoin and why you need it. So stay tuned. There's a lot of great more videos to come. Please like, subscribe. I hope you enjoyed this. And until next time, everyone, have a good day.